The content discussed in this podcast is for informational and educational purposes only and should not be construed as financial or mortgage advice. Always consult with a licensed professional before making any decisions regarding mortgages or financial matters.
Welcome to the Canadian Mortgage Show. Here are mortgage professionals Alex Pang and Alex Shanks to cut through the BS and educate Canadians on all things mortgages and real estate.
Welcome to another episode of the Canadian Mortgage Show. I'm your host, Alex Pang, along with my co-host, Alex Shanks. Shanks, how you doing?
Doing pretty good, man. You got a really ugly sweater on. I thought we were just talking about Christmas sweaters. I didn't think we were going to pull on our ugliest sweaters.
I got to support my team, so it's ugly.
Yeah, if no one's watching this, he's wearing a Canucks jersey, and it's looking pretty ugly. And
yeah,
I didn't know.
Ugly Canucks Christmas sweater. Now yours is ugly just for the fact it's ugly.
I went for the real ugly sweater.
Yeah, we were talking before the recording is that I'm doing a lot more Christmas dinners now, and I'm already starting to feel like I'm gaining weight. My pants are getting tight, and we're only mid-December, so man, there's no hope.
It's crazy. I feel like a week ago it was like, oh, it's not even, we're only just starting December, and it's like, holy shit, like we're 12, 13 days away from Christmas now. I got to get shopping.
We are halfway. Thankfully, my wife takes care of all that, so the only one I have to take care of is buying her present. And now
I got to get her. I got to get my wife. That's all I'm really worried about here.
Our family's super practical. We have lists, and we just give each other the lists. So my wife tells me what to get her.
Yeah. Nice. Yeah. That's same for mine, but I like to try and get something that she's not going to know about, because it's hard. I don't know, like you just find out, it's like Christmas is fun with the kids. I mean, I'm at that really fun age where like they're super excited, but I just wish to have that feeling again when you're like, what am I going to get? Am I going to get that gift? Am I going to get that? Or now you just know what you're getting.
Yeah, I'm at a point now where I honestly don't want people to get me things because I don't really want anything, and I'd rather just buy it myself, right? So because I don't want to have to return it and all that. I'm like, you know what? There's certain things I want to get, and I don't want you to pick something that I have to return. So just give me the cash or do whatever. Or give me an Amazon gift card, and I'll buy it whenever I want or whatever.
I want to do more like activities and stuff. Do plans with families. Be like, hey, let's go. We're going to go up the mountain. Hey, let's go on vacation somewhere. That's the kind of stuff I want to start doing.
Yeah, time spent with families is super important. We have a pretty jam-packed show. Why don't you start us off?
I mean, people should not listen to me when I say I know what's going to happen with the interest rates. Every time, it could be a good thing. Every time I say 25%, it becomes a 50% drop. By that, a 0.5% cut by the Bank of Canada. We thought it was only going to be 0.25, didn't we, Alex, for last week?
Yeah, I have to give us a little bit of a break. The unemployment news came out the day after we recorded this pod. So at the time, we made an educated decision or an educated guess leading up to it. Now, the day after, unemployment came out at 6.8%, and that essentially tipped the bank toward the 50 basis point side. Now, am I unhappy about it? No, I'm really happy that they did 50 basis point. But there's always a double-edged sword. When they're making a large cut like this, it's good for mortgage variable rate and HELOC borrowers, but at the same time, it's a sign that the economy is not doing well.
This is an emergency cut. This is not the norm. This is called an emergency cut. We're hitting at the same pace that we did at COVID. They had to do emergency rate cuts, and so that's where it's good in a sense, but like it means that the Bank of Canada is really scared for our economy.
Yeah, absolutely. So the key lending rate, again, this means nothing to you and I as a consumer, but the key lending rate is down to 3.25%. The forecast is that they're wanting to bring it to 2.5 eventually. So probably another 0.75 in cuts in more gradual paces, like a 1/4 point cut, pause, 1/4 point cut, pause, and so on and so forth. Now, something that means important to us is the prime lending rate. So prime is now down to 5.45. Now, when it comes to variable rate mortgages, now we're talking about the low 5s, high 4s. So so now we've made the most cuts of any G7 nation. We've dropped 1.75% since the beginning of the year. Yeah, and more cuts along the way in 2025, but in a slow, gradual pace.
Yeah, that's what I hope. If we do another 0.5% cut in January, holy smokes, there's something bad brewing. And that's where we have to see what's the Fed going to do. Good thing for them is their inflation showing that it's not increasing, which is going to allow them to drop by 0.25. Because if we start to get under too much of parity, and what I mean by that for everyone is we are cutting faster than the US is. If the US isn't cutting and we keep cutting, our dollar will keep dropping. And as
Yep.
we've seen, our dollar's already dropping. It's actually interesting. After the rate cut, the dollar actually skyrocketed again. It actually went up. It's come back down again. So there's a lot of volatility right now, but that's where in volatility times there is chance and opportunity for people. For one, like if you're getting a mortgage, it's like, hey, do I look at a variable rate now? You might actually be only a little bit more than your fixed rate mortgage. But if another rate cut comes in, now you're lower than a fixed rate mortgage. Previously, everyone was having to go fixed, even just for qualifying issues. Now we're getting that spot where people might be going variable again just to qualify for more.
Yeah. Oh, probably as short as a few months ago, we were saying that the variable was about 1% more than a short-term fixed.
Yeah.
That spread is almost gone now. I think it might be like maybe a 0.25% difference at best. But yeah, like what we said before, that go variable and then lock in at the lowest time next year, it's tracking towards that way.
Yeah.
So the premise behind it all, why, like I alluded to earlier, why they made a 50-point basis cut is unemployment rose to the highest level since 2017 at 6.8% if you don't count the pandemic years. Now, here's an interesting stat here. They added 51,000 of new jobs, but 90% of that was in government. Like, that's not how you
How is
grow an
that even
economy.
possible? How is that even possible? Like that just doesn't even make sense to me. Where are those jobs? Like, what are they doing?
I wish governments were run like businesses where you have to, there's profitability and then there's expenses and then you have to balance. If you are spending too much money, you got to be more efficient and start cutting your expenses.
Did you
Government doesn't
see?
have that.
Yeah, did you see Elon Musk? Obviously, everything that's going on with the U.S. Just saying like how antiquated systems are, and like that's what I always find is like every system just does not talk to each other in Canada, which adds cost on layer. And let's talk about me and you. We've been doing a podcast where we're coming up on this is our 15th or 16th episode.
17th.
17th, holy smokes. And I'm going to tell everyone it did not cost us $1 million to do all these podcasts. We've done more than the Canadian government did. We might even have more views than them. Did not cost $1 million. So, hey, if you want some help there, the government, me and Alex can teach you guys what to do.
Oh yeah, and we're not going to charge 80 million on some sort of arrive scam app.
Yeah.
79 million, sure, we'll save you some money there, but yeah, it's just baffling how like the only thing that's growing is bureaucracy.
Yeah.
So we need to cut down on the bureaucracy because this is not working. So just a little shift in gears here. There's been a stat out there that this is not surprising, but investors in BC make up 25% of home buyers between 2018 and 2020. So that was right before COVID hit, according to a StatsCan report.
I wonder if it'd be more. That like honestly that number seems low to me. And in all honesty, I wonder like 2021, 2022, I feel like that number has to be higher.
Oh yeah, I bet that's like 50%. Like I have no doubts
Yeah.
that's at least half. And of course, the higher the number is the condo units, where again, this number is old. 33% were scooped up by investor buyers during that same period. But that number probably shot over to like 2/3, 75% during COVID, where money was free. People took money out of their lines of credit because money was cheap. And then they plopped it down on investment property, either pre-sale or resale. And oftentimes they were shoeboxes in the sky.
People were pulling out of their home equity line of credits to invest in the stock market because at one point it was like 2%. And people were almost printing money in their eyes, but it's like you got risk and you got reward. You have to be ready to either deleverage quite quickly or you're going to get caught with your pants down.
Yeah, greed was abound. And unfortunately, we were all caught up into it because you hear someone, friends or whoever, like, oh, they're doing really well in the stock market, or they're doing really well, and crypto is all of a sudden going up, and lineups out the door with these pre-sale centers. It doesn't matter what you're buying; it's just get something because it's going to go up. And yeah, it was just a weird time too, with all of us dealing with COVID and all that stuff.
And that's for the condos, they need the investors. Like that is how the developers are able to make the money. That's how they're able to sell the stuff up front. Because a lot of people that are wanting to live in it, they're not gonna buy it because they need to live in it right away. Where an investor's like, hey, you know what? I'm willing to park some money in here for 2 to 3 years and then maybe see I'll sell it or rent it. And so that like we need to incentivize somewhere to be able to have people purchase these pre-sales, or they're not going to be able to get the financing because they have to sell X amount of them before they can even start the construction.
Yeah, and unfortunately, kind of greed ruled the day, and developers start like previously, before the last 15 years or so, developers would sell it at market value. But somewhere along the way, greed took over and they started future pricing it, where they added in a 10-20% bump to the current value in anticipation that, hey, this is where it's going to be. And it worked because property values went up more and above that past the time when it was incomplete. But now that the party has stopped, that the music have stopped, things that are being sold for 1,100-1,200 square foot, they're not appraising. They're coming in at 900 square foot. And
But there is still like I'm interested, like helping a couple of clients that bought in like the North Van area outs, and like we're getting appraisals, and like they bought in 2021, they bought at like higher prices, and they're going to be able to sell and make a bit of a profit. But they found the right locations, they did their due diligence. What's the density? Like what's going to be here? And so like there's still ways to make money on the real estate, but you just can't buy anything and hope that it's going to increase.
yeah, that's not the proper premise, and that's not really investing. That's speculating, and
And now
it's
one
come
thing we
down.
didn't add on here, Alex, but I want to bring up there's the way that for one that people that are doing constructions on these, like a lot of them do get financing from the government through CMHC, doing construction, even doing like long-term buying and renting. There's some changes that are coming there. Like the government has been trying to flood it for one to get people to build more homes. Before you could put like a minimum 5% down. They're starting to change that to increase the down payment, which is again going to make it harder for people to want to buy these or want to actually keep constructing homes, because we're just going to tighten the margins and make it harder for people to actually want to do it.
Yeah, and you've alluded earlier a few months ago that the only ones that are building are the CMHC
Yep.
loans that are going 50 years at really low rates.
Yep.
That
Yep.
it makes the numbers viable for
Yep.
builders. And obviously not in Toronto or Vancouver, but probably somewhere
Yep.
in like Alberta or
It's
something like
Alberta.
that.
Alberta is just like every time I go on Facebook, it's just like
Yeah,
CMHC, MLI, MLI.
yeah,
It's just
yeah.
it's plastered everywhere.
Yeah, and because Alberta encourages investment, we talk about this over and over again because they encourage investment because the development fees are lower. Now
Yep.
Vaughan has pioneered that as well, lowering the development costs.
Yep.
I'm going to repeat it again. Municipalities, please follow along. If you want development, you got to
Yep.
lower some development fees. We know that Burnaby essentially pulled a heist on tax dollars and essentially stole 43 million from the government, and you turned around and jacked up development fees by 50,000, or I even heard 100,000 per unit, right? For I
Jesus.
believe the multiplexes, something that's
Yep.
adding to the housing unaffordability. So you better stop
Yep.
it.
Yeah.
So
And that's where the next one we got is obviously, which is affecting investors, is that the Canadian rent prices, it fell to a 15-month low in November, which everyone always says rent only goes up, but that is not always the case. It's been proven in history, like there's certain locations that rent does not always go up. Depending on where you are, there has been a steady increase. I would say Toronto's probably the hardest hit right now with the rent prices because there's just so many pre-sale condos.
yeah, I guess we've hit a glut in the market now where investors are trying to unload their properties, their rentals, because they're not penciling. They can't handle $1,000 a month negative cash flow. They've done it for a couple of years already when the rates
Yep.
skyrocketed, and now it's hit a boiling point, flooding the market with listings. If you're a buyer that's looking for a condo or townhouse, you're in a good position. But at the same
Yep.
time, there's more supply. That's actually good news for renters, where rent has actually started creeping down. Yeah, so Toronto hit its lowest point in 28 months, and Vancouver's reached a 30-month low as well. So even despite saying that, it does not make Vancouver or Toronto more affordable. It's just less crazy, but still crazy nonetheless.
Yeah, it's just not going up. And that's where I was talking to someone today, like my first rental, I paid $600 a month. That's what I paid for a 1-bedroom apartment. That same thing in my town would go for $1,800 now. Like,
yeah,
it's crazy.
You can't even rent a room like that for 600. It's $1,000 a month, I think, for a room if you're sharing it, at least.
Yeah.
But yeah, it's crazy. So let's shift gears a little bit. We don't want to talk about the government, but sometimes they just give us too much stuff for us to talk about. So everyone has this opinion about the whole GST holiday that the Liberals are doing, right? Where honestly, is it a waste of time, and is it costing businesses more money to fix their point of sale systems one time and then fix it again afterwards? It's costing more money. There are rumors that even Finance Minister Chrystia Freeland is at odds with the Liberal government about it. So there's rumors that she doesn't even agree with it. So
God, it's just they're just trying to buy votes, which is like I would love to know if someone's like sitting there cheering like I want this. Like I would be really interested to know, like, is this going to make it or break it for someone? If they don't get this, like, hey, Christmas is ruined. It's already so hard. Like this Christmas is ruined for many people, and getting this money is not going to change that right now. And that's where I saw Trudeau post a thing about, oh, you're going to be paying lower prices at the grocery stores. A lot of the things that he says GST exempt are already GST exempt.
Exactly. So I'm like, that is not going to do anything. It's like a whole lot of nothing. And it seems like a lot of the ministers really are just, it seems like they're just vying. They see the writing on the wall for Trudeau, and they're almost positioning themselves to the Liberal leadership position and not actually governing the country. So
I just feel like we're just fighting each other. Like the Bank of Canada is fighting against what the government is doing. No one in the government is working together. Like we're not trying to make budgets. We're not trying to do stuff like, there's so many discussions that could be had saying, hey, like we want to do this. Like we can actually see that this is going to help X amount of families. Prove to us that it's going to help the families. Just saying you're going to give money, like it's not going to help anything.
Yeah. On a side note, when you're saying that it's Christmas is ruined, what's ruined Christmas is Canada Post being on strike. My wife has an Etsy business, and her like Christmas time is their busiest revenue time. It's completely gone because she can't ship her items, and it gets delayed, and then it's not worth it for her to use like FedEx or UPS. So it's just her revenue's gone, and that's hurting people a lot more.
Yeah, following a guy that's been, since I've been on TikTok, I've always followed him. He does like crazy candy stuff from out of Ontario. And he was just like, it's insane. He's losing money. He's actually going to lose money this Christmas when it should have probably been the best Christmas ever for him. He could have started charging people for like shipping and stuff, but he's like, you know what? I don't care. You guys have made me like that. And it's costing me, says every order is actually costing him $100.
Yeah. And we talked about this before, but they want a 24% raise, but yet they're bleeding money. They're $3 billion in debt. I'm like,
that one's interesting. I dug a little bit more into that, and that one actually like realizing like what they're doing is like, so I didn't realize that the Canada Post own Purelator, like they own like the highest 90% shares. Yeah, like so the profit margin on Purelator is like insane. So like they're bleeding in one aspect, but they're using it to bring down their expenses and income everywhere. And so everyone looks at it as a negative, but it's like they're being able to make sure that they're making better revenue somewhere else and writing that income off and stuff. And
their service is not great. We're going to touch on this later about oligopolies, but the cost to send something. So I hear this from my wife. It's cheaper to send something to the States than it is to like Nova Scotia. To send a little item to Nova Scotia, it's $20 in Canada Post. Versus if she ships it ships it to the States, it's $9.
That's
so
crazy.
How is that? Yeah. Why is that? Like, and USPS, they work 7 days a week. They actually provide service. Whereas Canada Post is like 5 days a week, if not even 8 hours a day. And I heard through the grapevine is that they don't actually work their full 8 hours. They have a route. Once they finish their route in 2 to 4 hours, they're done for the day, and they just get paid for the 8 hours.
Yeah. Yeah,
so,
and that's where I mean, hey, if you work fast, it's like, hey, that's fair. But it's seeing some of the pays. I saw one like if some people have worked there for a long time. 50 years ago, they were making $22 an hour, which was like insane. I know people that worked in the mail industry that own a lot of real estate. They were able to buy a lot of shit because they made good incomes back then, which we know like everywhere, no incomes have kept up to pace, and that's like the really big issue. But it's still like, what they're asking for, is it actually going to benefit them? Or is it like, you know what, you could have increased your service, then start charging more, where now everyone's like, we're just going to go elsewhere.
Yeah. And it seems like, unfortunately, there's no public sympathy for Canada Post workers, because like, I understand,
which is hard.
that,
I mean, it's hard. Like when else do you do it? Like, it's such a hard thing. You have to do it when people are going to listen. And the one thing I have seen, I'll give them a shout out in my area. Like, they're still letting people bring Santa notes in. They say, hey, if we're not started, come back. We'll make sure that he's got it. We send it. They're giving the notes to the kids and everything. So that's cool to see. But yeah, it's the small business owners like your wife and stuff. Like, people could potentially, like, they actually could be losing like a lot of money. They may go out of business now.
Yeah. And we understand that Canada Post is a pseudo-government entity, so it's not really like a business where it needs to balance the books. Same thing with RCMP or like hospitals. They're probably not making money, but there's got to be some better level of service that's out there than it is right now. Like, when I ship something, let's say I'm in Surrey and I need to send something to like maybe Coquitlam or something, it has to go to Richmond before it goes to Coquitlam.
Yeah.
So it has to go this huge roundabout way before it does that. I'm like, that is not efficient. Like, you got to learn from Amazon, their model. Like, how can they get items out so fast, right? 1 day shipping, Prime, everything.
Yeah.
So
that's just, they went in, like, when COVID hit, they just didn't change with anything. They just like, oh, we have the biggest market share, and they do not have the biggest market share anymore.
Speaking on government stuff, now Krista Freeland, she signaled the government is actually going to miss the deficit target. Surprise, surprise, ahead of the fall economic update, which will happen on the 16th. So by the time you hear this pod goes live, it would have been released already. But at the time of this recording, there's rumors that it's not going to hit, which, are we surprised? No.
Yeah, no. And did you hear what they're doing? Like, they've been asking, the other parties of the government have been asking them for this budget beforehand, like what's going on. They're pushing it to the very last day, because after that, Parliament's closed. It's fully closed. There'll be no questions. You can't argue the budget. You can't say, hey, it will be, hey, we're going into 2025. We're at a new budget now.
Yeah. So the current deficit is at 40 billion. And so rumors are suggesting that the budget, the deficit could hit 60 billion. So like 50% more than current. So that sounds insane. Like they're going to pull out all the stops to spend money and do all this crap to buy votes and all these things that they'll announce to make it sound like they're doing something, but they're not, because we know it's an election year.
Which is, I honestly, I feel bad for, let's say, even if somehow the Liberals came back into power, whoever is going to be taking over what we have right now, it's going to suck like hell. Like, it is not going to be some sunshine and rainbows. It's going to be painful for some of us. Like, what we have to do is going to be dirty. And it's, I feel bad for a Liberal person. I feel bad for a Conservative. NDP is not going to get in power, but it's not going to be easy. Even if someone's excited for the change, it's going to be ugly.
Yeah, I had this talk with some other people today. Like, when there's a change in government, and we're pretty sure there will be, it's not that we're voting for Pierre. It's more like people are just tired of Trudeau and they just want to vote him out. So eventually it's the pick your own poison. We're going to be tired of the new government eventually. So it's how the world turns.
Exactly. We did that with Stephen Harper. That's why everyone didn't want him. So they voted him, and they're like, oh, we just want someone else in here. And that's where it's like, are we actually ever solving anything then? Because we're just yo-yoing back and forth.
Yeah. It's unfortunately, that's just the way life is. And we have short-term memory. So, Yeah, so there's another government announcement that didn't have huge fanfare. They just snuck it in with a post, and good thing you and I are pretty active on Twitter, so we caught it. So let's talk
Yeah.
about that.
Yeah, and that's what I mean. It'd been talked about a long time ago, but so what they've done is they're on starting on January 15th, they're increasing the Canadian secondary suite loan program. It's going to double from 40 to 80,000. Now, not many people use the 40,000 because the cost of everything is so expensive and many people couldn't even build it. Now, they say this is going to make it easier for homeowners to finance the creation of rental units on their property, such as basement suites or laneway homes. Now, I'll talk about it after.
Hold up, hold up, hold up, hold up. Now, I understand basement suites. The
Yep.
last time I haven't built one before, but from what I've heard, how much does it cost to build a laneway home? Like half a
Ooh, I
million
mean, I
bucks, right?
was. Oh, that's. I mean, I was to build ours. We're 450, probably looking
Yeah,
at like that's
like
yeah.
400 to 500,000. 80,000 will not build you a laneway home.
But you so what Christina Freeland said with it, she integrated with, hey, you're going to get this 80,000, and also don't forget you can now refinance your home up to $2 million to a 90% loan to value, and so we are just going to stack debt upon debt.
So they're not making it more affordable. They're just making it
Yep.
easier to accumulate debt
Yep.
and be debt ridden forever,
Yeah.
essentially.
Now, depending on once we get some more of the like actual information of how this is going to work, they're talking that loans are going to be offered at 2% for a 15-year term. Now, for everyone to know, to get 80,000, that's $500 a month. I'll tell you this, if there's not crazy stipulations, I will be building a suite in as many places as I can with that money because $500, that is cheap. And you could add a suite for $80,000.
Yeah.
I honestly believe there's going to be a lot of stipulations. You're going to have to be under market value. Like there's going to be a lot of rules in place for this. And like we've talked about before, Alex, like people don't want renters in the home, especially in BC, because we have no control over if the person doesn't pay rent.
Yeah, we have rent control in BC and Ontario. It doesn't honestly, it doesn't encourage any owner to rent because it's
Yeah.
such a rent controlled, like it's so slanted towards renters' favor.
I think some people like, hey, if I don't have an issue with renters, I've never had a problem. Like if I'm able to use it, hey, I'm going to take advantage of it. But again, there's so many people that are just so against having a renter. They've heard the stories, and so I don't think it's going to move the needle as much as they think it is to get more homes out there. I think they also want to use this because we know that we need, what is it, 3 million homes built by 2030. I think that they get to add suites into that. This is a unit that they get add into their metrics of saying, hey, we added 1 million units. By that, they mean we added 1 million rentals. We didn't actually build 1 million houses.
Mm-hmm. Yeah, so more details about this one is going to be announced on the Fall Economic Summit. Again, December 16th. You probably would hear it by now, by the time the pod goes live. But at this time, we don't know much details about it. But you mentioned, you heard inklings about there's a big caveat to this one, right?
Yeah.
Maybe?
So if you have a principal residence and you start to change like your house and everything, if you start adding walls, you start doing things, this starts to affect, like it starts to add capital gains into it. You're changing the structure of your house. And the governments have wanted to target people's principal residence to get taxes from them. This is a little bit of tinfoil hat on. This could be a way for them to say, hey, we lent you that $80,000. You want to go sell your principal residence now? Hey, that suite you built, that was 40% of your house. You're going to pay capital gains on 40% of that profit now because of that change in your house, which would affect capital gains.
There is no free lunch in life.
Yeah, no, and there's going to be caveats, but we'll learn more. And of course, we'll share it with you guys.
So you brought up a good point. Didn't BC have some program about secondary suites not too long ago?
Same thing. It was about 40,000. I looked into it myself, and yeah, there was a lot of caveats. It had to be 30% below market rent. It had to be like you had to do it for like 5 years, 6 years. Like there were some big things, and yeah, 40,000 just couldn't do what you wanted it to do.
I'm curious if anybody actually took the BC government up on that offer. Like ever since that one announced, that probably just disappeared.
Yeah,
Another failed
I doubt
program.
it. Yeah, And again, like we have to figure out on the mortgage side, like how does this affect, like how are they going to tie this in? Like when you do a mortgage, it gets registered on title. Now, is this, if someone does this, is it going to get registered on title as well? Is it going to be a second charge? Are lenders going to like it? Like to me, there's just so many things that have to be talked about.
No. Yeah, so more news will come out about that one. We just want to give an update on recent news that we talked about several weeks back. So remember how TD got fined in the States for money laundering, encouraging money laundering. A TD Bank employee in the States was arrested and charged in connection with money laundering. That employee, 24 years old.
Jesus.
So
So he allegedly assisted by issuing dozens of debit cards for shell companies in exchange for bribes. It's just like, holy, well, where's all these companies?
yeah, this is just the latest in the in the investigation that led to TD being fined $3 billion US. Now, it's funny how it's the Department of Justice in the States that did it. You don't hear that happening in Canada. Apparently, our government's
No.
too scared to go after the oligarchs. It happened in the States, so this could probably be a tip of the iceberg of other things that are happening.
Yeah, and we're seeing changes on lenders. Like this is all being cracked down as mortgage brokers. We have to do more FinTrack, which is for money laundering. Like everything is being looked at with finer details. And it's because there's people that do bad things, and every other person now has to be treated in that exact same light.
Mm-hmm. Now, speaking of oligarchs, there's a graph that was released on from Wawa. So Wawa is a very popular rate site, and Canada's banking system is always been known as oligarchs. The big six banks, they own 97% of the assets in Canada, owned like liquid assets.
Yeah.
So it amounts to, what's that number? I think it's like $6 trillion, I think.
Well, I mean, they got 9 trillion in total between all of it. So, I mean,
Yeah, 97% of the assets. Yeah, 97%.
Yeah.
So probably like 8 trillion of the deposit, like the liquid asset deposits are in the big six banks. That's just astounding.
Yeah.
Like
when you even look at it too, like even RBC and TD, like they're both above 20%, where even the other banks after that are all below it. Like RBC is it's just a monster. And same thing, TD, and they were trying to get really big in the US, but they just got fined $3 billion. But also they made a shit ton of profit. $3 billion to them is a drop in a hat.
Do us Canadians not like choice? Do we just like our big conglomerates? Now, this is not just the banks. We're talking about telecom. Telecom has the big ones, Rogers, TELUS, and Bell. And then all the subsidiary ones, you got Fido, Virgin, Kudo, and all that stuff.
Just keep getting bought up by the other companies.
Why do we not have competition? What else? Food. What are the big ones in food? Is it Sobeys and Loblaws, right?
But what's that? Galen, Weston, or whatever?
Oh yeah, Weston Foods.
There's like 3 of them that own everything.
That control everything. And hey, don't need to talk about airlines. All we have is what? Air Canada and WestJet. Let's not talk about the little crappy airlines like Swoop and Flair and all that stuff. But why can't we let competition? Why can't we have more competition? Now, the whole argument is always, oh, our country is so vast and like the infrastructure is too high to make it competitive for other companies come in. I think that's a bunch of BS. Like
100%. It's the lobbying. It's the lobbying from these companies saying, "Oh, like no, if you do that, it's not going to be good for us," and it's craziness.
Yeah. Now, if you let like foreign airlines come in for competition, like, geez, man, like same thing with cell phones. Like we have the most expensive cell phone plans in the world of any G7 nation or any first world nation. Like you go to even Australia and Europe, isn't it like 50 gig is $20 or something ridiculous? Whereas not too long ago, we were happy with 10 gig and at $60 a month.
$60, yeah. Yeah, and it's starting. I feel like it's starting to get better, but you have to fight for it. You either have to go to a new provider or you have to call your one and say, "Hey, if you don't do this for me, I'm leaving." Like they make it so hard.
Yeah, I'm with Fido, and like thankfully they're just giving away data because I'm sure they do the research. They know that most people probably don't even go over 5-10 gig anyway because they're on Wi-Fi at home. I have 55 gig and I'm paying $50 a month. Yeah, thanks, but I don't really use it. I'd love to pay $20 a month for that 50 gig. So
yeah, that's where, I mean, Fido has been pretty good, and I find like they'll send promotions and they'll actually say, hey, you know what? We're going to give you 60 gigs for the same price now. Like, that is how you keep a consumer. Let's talk about banks. Let's talk to everyone. Everyone is so good at trying to get a customer in, but they're horrible at trying to keep them. And it's so expensive for every company to bring the new customer in. I don't know how banks haven't learned from it. I don't know how telephone companies haven't learned from it. It's like, man, once you have the customer, spend more money on keeping them.
yeah. And like maybe as Canadians, we are conservative and we just like the trusted big brand names, but yet we end up paying for it because we don't often get the best deal or the best option. So
we see that, Alex. Everyone wants the people that deal with their bank. They feel that the bank is there to help them. Then they find out, what do you mean? The bank never called me and said, hey, I could actually get a lower rate now. And that's where the banks are there for them. They're not there for the consumer.
Yeah. So, yeah, like the banks really are there to make money. So, like we mentioned this before, banks are great for what you need them for, but if you want advice from them, you're not going to get advice. You're going to like, you probably feel the same as I do when you go in. They're always going to try to sell you something. And either because they need to make their quotas or their manager's breathing down their back, they are there to make the shareholders happy. Now, you don't like, they're not going to talk to you about saving money by breaking a mortgage because that hurts their bottom line. So that's why you need to talk to someone independent like us or someone else who's has your back and who's going to look out for you. That's not has a vested interest in anything else. So
exactly.
I think it's time for mailbag.
Let's do it. The last one here.
Okay, so here's a question here. My business makes 300 grand, but the banks say I can't qualify for a mortgage of 200,000. Why is that?
I'm going to put money on this, that this person probably pays himself 30,000 from their company. So what I find a lot of people think is that, hey, my business is super profitable. I'm making this money. Now, you also have to remember your business has expenses too. When you're going for a mortgage, the banks want to see reportable income. They want to know that you're actually paying taxes on this money and they can see it. And that's where having a business is pros and cons. You get to shelter taxes. You can actually write stuff off, which is really nice because you can make your income less. But if you want to go get a mortgage, it becomes much harder. Now, there's ways, certain lenders, if you have a company, you can look at using your corporate income. You may qualify that way. We also then get into what's called alternative lending. Banks used to be able to do this after the financial crisis. People would just start companies, say I make 300,000, go get financing, and then their business would collapse. So banks have gotten a lot more tight on this, and that's where alternative lenders come in. They let you look, we get to look at your bank statements. We can say, hey, you've brought in 300,000. We have to write off real life expenses here for you. But now, hey, maybe you qualify with a 250K income. You're not qualifying for $1 million mortgage. But hey, you still get to pay only taxes on $30,000. And that's where sitting with someone to say, with your account, hey, would it make more sense for me to pay 200,000 on my taxable income? Or do I look at an alternative lender, pay a percent higher on the interest rate? And that's where I love showing people those numbers. I don't know about you, Alex, but like when I can show someone as a business owner that, hey, you want to save $150,000 over 3 years in taxes, it's like one of my favorite feelings.
Yeah, that's what I do too. Like, I think some people are telling business owners, like, you got to claim more income so you can qualify.
Yeah.
Like, yeah, so let's say you pay yourself $40,000, $50,000 and your income you bring in is 300,000. If you bring your income to like, let's say 150, what's the tax rate at 150? Like 47%.
45, yeah.
So
yeah.
Of that 150,000, you're probably paying 70 grand in tax, something like that.
Yeah. Yeah.
Now, if you use the alternative lending route, yes, you may be paying probably about 1 to 1.5% more in interest. So you might pay 10,000 more in interest, for instance, versus 70,000 more in income tax. Which one you want? Pay 70,000 or just 10,000 more in interest? So I know my answer. Keep doing what you're doing, but be okay with just paying. Just go with alternative lending, B lending, and just paying higher fees.
But that's where you have to look at the numbers. Now, sometimes people think they try writing their income down with all their expenses, but like you also have to remember you have to live. So you have to look at the income you actually need to live. And that's where it's, again, working with an accountant, figuring out, hey, do I keep writing my income down or do I show less? And then I have these options, which as business owners, that's the pros. As an employee, you cannot do that.
Yeah. That's a saying that I like to say, like, writing down your income is great for taxes, not so good for when it comes to borrowing money. So it is, you have to balance, talk to your mortgage broker and your accountant. Oftentimes we might have differing interest, but plan out your finances before you plan on buying properties or refinancing and doing anything, and just help set you up for success. So
yeah, exactly. You can, if you know that, hey, you can do it for 2 years, set yourself a plan of like, hey, I want to buy this place. I'm going to do it for 2 years, pay myself. After that, you can then start paying yourself as much. You have the mortgage, you have the house. You can then start paying less in taxes.
Awesome.
Now, this is a good one, is when I get a mortgage, can I pay it off before the end of my term?
Sure. Why not? Like it's a loaded answer. Yes, you can pay it off, but most people have closed term mortgages, so you do have prepayment privileges. Depending on the bank or lender you are, could be anywhere from 10 to 20% per year. You can make lump sum payments that without penalty. Now, if all of a sudden you won the lottery or you have an early inheritance and you want to pay it off, sure, pay it off, because as long as like there is going to be a penalty to it, if you don't mind paying it, by all means do it. But some people don't want to pay the penalty, so you can take advantage of it. Maybe you have 3 years left on your term. You can do some lump sum payments to maximize the prepayment privileges, either 10, 15, or 20%. And by the end of the 3 years, the end of your term, then you can pay it off with no penalty. So if you have the means to do it and you can pay it off and you don't care about the penalty, by all means. If it's 15 grand, but you just won $3 million in the lottery, who cares about that 15 grand? Then your life is better. But if you want to game it and you're okay hanging on for a little bit, maximize the prepayment privileges. And then when your term is up, then you can pay it all off penalty free.
Yeah, I think that's where you just have to look at the numbers and say, hey, if obviously if you had a 2% interest rate, you'd much rather keep your mortgage, invest that money, and pay it off. Now, if you have a 7% interest rate, it might be, hey, and that's where I find it's people, they try and save on the pennies because like, oh, I don't want to pay this penalty, where it's like that penalty may not be as bad as you think. And if you do it, if you have the funds, it actually might help you better. But on the other end, maybe you spending that money may actually cost you.
Yeah. And at the end of the day, what helps you sleep better at night? Like the mortgage could be like a big debt, like something that's anchoring us. And if people to have mortgage mortgage paper burning parties, and if that improves your life and you had to pay a $5,000 penalty, is that $5,000 penalty worth it to just bring happiness to your life again? Because at the end of the day, I looked up, unfortunately, mortgage means, was it death pledge? Yeah. So we're essentially death pledge pushers. Mortgage brokers.
And that's where, I like to sit with people and say, hey, I'm here to help you pay it off. I don't want you to take that long, but I have a story, Alex. I met with a couple. I never did their mortgage. We were helping them with some stuff. They had like $200,000 sitting in their bank, but I saw like this mortgage. I'm like, what's going on here? They're like, oh, we refinanced it in 2020. We were going to buy another property and investment. We never did it. At that point, they were on variable, so rates were high for them. And I'm like, so the funds are just sitting in your bank account? They're like, yeah, we talked to our bank, and they said it was going to be like a $40,000 penalty to break it.
Wow.
I showed them the math, sat with them for less than 5 minutes, and I said, you're going to pay $5,000 to break this. You're on a 3 months interest penalty. You could not see the relief over them. They've been spending this money on a monthly amount, paying this thing because they thought they would pay more money. And it was just like, it's so scary to hear those stories. And that's why I love doing this with you. We get to talk about stuff, and I hope some of it resonates with someone to be like, holy shit, maybe I'm doing something wrong here.
Yeah, exactly. We're coming to the end of our episode here, and I just want to take a moment here just to thank all the listeners and viewers for supporting our pod. We've been doing it for 4 months now, and it's been a blast doing this with you, Alex.
Yeah,
now,
it's been awesome, man.
You may or may not agree with our opinions, and sometimes I don't agree with Alex's either because we have different viewpoints. But we appreciate you, the viewers and the listeners here, just for joining in on this conversation as we're all trying to navigate through these rough waters in these times. So
yeah, I'm excited for the new year, Alex. For one, it's going to continue to do this. I'm excited for when we get to say that we've done it for 1 year. That's going to be a nice celebration, and hopefully to bring some more news, some more information for all the listeners out there.
Absolutely. You know, we talk about this offline. Even before the start of this pod, I was saying to Alex and our producer, Bernard, I'm already envisioning the day that we've celebrated our 100th episode. Now, 100 episodes that's 2 years, but let's get to the first year. So that's 50 episodes. So we're not quite a third of the way. We're a third of the way at 17 episodes. But yeah, I'm enjoying every moment with you, Alex. I do want to give a special shout out to our producer, Bernard, operating in the background for editing and producing our show. You make us look and sound good. So thank you, Bernard. Thank you so much for all your help there.
Yeah, thank you, Bernard. I'll tell you this, everyone, we would not be able to do it without him. And even for Alex, thank you so much for doing all the extra stuff that you do. I will tell everyone, I'm the guy that kind of comes, I show up, Alex has everything ready for me, makes it awesome, and I love getting to hang out with them, but it wouldn't be possible without them.
So you hear it from first, folks. Alex Shanks, he's the prima donna. I do all the work. Alex Shanks comes in and takes all the credit.
Yeah, exactly.
All right, folks, we're actually going to take a couple of weeks off for the holidays. So our first episode back will be on January 9th. So on behalf of Alex Shanks, I'm Alex Pang. Want to wish you all a Merry Christmas and Happy New Year. See you in 2025.
Have a good holiday, everyone.
Now, if you enjoyed this episode, make sure to like and subscribe. If you're listening on Spotify or Apple, make sure to follow us. Please give us a 5-star rating. You can even send us an email because we want to know what you guys want to hear about. That's what we're here for. Reach out anytime.